Hey, welcome guys, welcome back to another video. Yeah, so basically, if you're new to the channel, don't forget to like, subscribe, turn on your notifications. So I'm gonna be talking about a little bit more about marking your charts, right? Um, yeah, so marking your charts. So basically, we have different ways you can mark your charts. You can use support and resistance with the most common support and resistance, right? Or you can also just mark based off swing points, swing lows, swing swing lows, and swing highs, right? So that's how you can also make your chart. So I'm gonna be breaking them down for you so you can probably understand and see what works best for you, right? So I'm gonna give you an example here. I'm just gonna make some notations. Look, let's say you have a downtrend, price going from from the upside to the downside, right? So this is how you can go about marking your chart. So like the first one we did say, it can either be a support or resistance, right? So basically, if we do have price breaking from this area, from this low over here, right, this becomes what's your this was your support when price was above it, right? Whenever price is above it, it will be a support, but when price gets below it, it becomes a level of resistance, right? So since we know that we are on a downtrend because price went up to this level, created a level of support, went up, came back and broke below this level over here, right? You can clearly expect price to come back to this level over here. And if price does hold without breaking the previous level, which would be this lower high over here, right? Which would be, in this case, this lower high would act as a level of resistance, because those who don't understand the support and resistance, for support price has to go down to a certain area and then from there bounce up, right? You have to bounce up. For resistance, it's like the highest point prices went from, when you went to the downside up until to the upside. The highest point, that would be a resistance point. So that resistance point should be able to hold price once price gets to give you that indication to the downside, comes back, even if price gets to correct up until this area. You get what I'm saying? So this level should be also able to hold price to the downside. But where do we want to be, right? We always want to be below this level, because price is selling, and this level of support over here, right? This level of support that which we had over there, right? This level of support that we had over here, once price was above it. As soon as price gets above it, you want to see price break it again to the downside, with intention to show that price is definitely going to be selling, right? Obviously, we would have also another level of support at this level. So basically, how you can also put support and resistance, say you can also say buyers and sellers, right? Support, buyers, resistance equal to sellers. You get what I'm saying? So we had buyers above here. So as soon as price breaks below, the buyers are no longer here, right? So price will go to the downside, which price also creates a level of resistance at this area for when price, went to the downside. You get what I'm saying? So this would be our new lower high, right? This would be our new lower high. This would be our new lower high at this area, right? So with that being said, we can expect price to go to the downside, right? So we have support, we had resistance also previously. Now we have a new support and we have a new resistance. You get what I'm saying? So on and so on and so on, right? And I can give you an example. Like I always say, I always like to use the 4 hour chart. So how was I gonna mark this level, this chart over here, right? I can clearly see that, okay, price broke below this area over here, right? This would be my level of support, right? Price bounced off this area, came back, bounced off it also, but still managed to give me an indication to the downside. Price came back to correct. As soon as price started to break through the downside, I could have easily sold. Price stop loss just above these highs over here, and then up until the next level of support, which would have been this area over here, where we have buyers also sitting because they were able to push price from this level back to that level over there, right? So when price gets below, we know that now this level becomes a resistance because price is below. So showing that sellers are pushing price to the downside, right? So that's what how you can be able to go about marking it. And as you can see, that's how it has always been, right? As you can see, price breaks below, comes back to this area over here. As soon as price gets below this area over here, you could have easily sold price, right? Stop loss above here, and then you could have easily sold price to this low over here. You get what I'm saying? Always the case, right? Price does that, always price does that. You get what I'm saying? So this is how you can go about it. Even if price was going to the upside, it probably would have still been the same, right? It's gonna still be the same, depending on how you prefer. If you're gonna be using ranges, some adding some confluences to your trading, just to help with your analysis and so forth, right? You can definitely see also when price go to the upside, price breaks above these highs over here, gives you an indication, right? Above this level of resistance, making it a level of support. Price comes down, and then once price gets above this level, you could have easily bought price above this level. Stop loss just below the lows over here created, and then aiming for this level of support of resistance at the top, right? Basically, that's how you can always go about it. Even if you let to go on a smaller time frame, that like probably say you want to do this on the 1 hour, I think it will still be the same thing, right? It will still be the same thing if you're gonna go about support and resistance, right? You're still gonna have levels where price whenever it's below is gonna sell, and price whenever it's above is gonna buy. You get what I'm saying? So still the same thing, as you can see there, right? Price breaks below, comes back and sells, right? Same thing over here, right? Price breaks below, comes above, sells, right? As you can see, right? Same thing as price when price starts to change to the upside now. You see, breaks above, come back, buys, but then goes back to the downside. So how how do you use this also to help with your entries? I think basically just like I said, based on how you're gonna be using support and resistance to make your charts, your entries probably would come from like the likes of 15 minutes, honestly. Let's take this area over here, right? You're gonna take this area over here. Let me just change the color of this. Yeah, let me add on some replay. Right. So we can clearly see that price has sold to the downside, right? Price gave us an indication to the downside, right? So we can expect price, okay, where is our level of resistance? Our level of resistance then would be at these levels over here, where we saw price coming to this, highest point, right? Price got to this highest point, and then from there, price sold, giving us this new indication. So if you're gonna go down to, like so 15 minutes, firstly, we'd want to see price play off. You see, price gets above, right? Price gets above, you can probably go to the likes of 15 minutes. And as you can see, sorry about the gas, I have flu, right? So as you can see, price, went above, tried to close, didn't have a body close. Price went up, we had a candle, close. So we can mark this over here as our lower high. And yeah, we can mark this over here as our lower high. You can mark this over here as our lower high. Haven't probably even enter an entry from here. Stop loss above, and then we can aim for these lows, this next level of bias, which is the support where price got to this level and bounced off of it. You get what I'm saying? So we can have an entry, and that's a good 1:1, risk to reward. 1:1.3 actually risk to reward. If you wanna probably maybe hold, maybe get a 1:2, that will be up to you. But pretty much this is how the trade would have critically, pretty much went. You know what I'm saying? So just from the indication price that the indication that price gave you from this level over here, right, to the downside, and as you can see, if we're selling price below this area over here, price would have, to the downside, there was price, doing thing. And you're gonna need a lot of patience. Honestly, you're gonna need a lot of patience to be able to hold, not rushing the process, just holding your entries and because this, you see, as this was unfolding, it took about 3 days before price started to actually drop. From Monday you could have got this, and then it's already Thursday, and from Thursday that's when price started to fall to the downside. You see, that's when price started to fall to the downside. As you go to Friday, and then there we go. Friday price then starts to drop very hard. So it's all about having to have that that patience. Sorry about that, guys. You see. So on Friday, then we had price dropping to the downside, and if you were aiming for this level over here, next level of buyers, as you can see, TP would have hit. You get what I'm saying? So that's just about that, right? And then we can move on to the next, how we can also mark your charts. Remember, I always talk about swing points and swing lows. There's people who still don't understand. You can still use this indicator over here, right? The indicator is by, I think the loan sum, high, lower, low strategy. So the indicator is by the loan sum, right? So it will mark this for you. Some of them it will mark them for you, but it's also up to you. It's not always 100% accurate, like those internal ones. You see, it will just, the bigger ones that you can see also by yourself. Like, okay, I can clearly see that. Okay, price is broken below this low is over here, right? So we ended up having the indication price came back to correct, create a lower high, price sold, and we do have a lower high over here, lower low actually over here, right? And then also now we have a new price giving us a new indication from that level over there. You get what I'm saying? So you can mark using swing points. But what I like to do is I don't like to, I just want you to train the eye, you know, train the eye just so you can get used to, understanding swing points and swing lows, right? Swing highs and swing lows, right? But my honest take on this is to always look for levels where price kind of made a low, went down, created a high, right? These two would always be a range for you, right? Me, I always like to include the confluence of ranges, understanding a range, right? So this over here would be a range for you. As you can see, price had went to the downside, gave you a low, right? And now you can expect price to come back to correct, right? So we have this level here where it will always also be like a support. This would be a resistance. The highest level where price went, and then the lowest point where price bounced off, to the upside, right? You can expect this to happen, right? As long as this lower high over here and this lower low what we did see price make first time, lower low, lower high, lower low. to the downside, right? So what I like to do is I'd say we had a break or structure to show that prices continue to the downside, right? Price broke structure, broke this low to the downside, create this lower low. Now we have this lower high. This lower high over here should be able to hold price for you, right? Should be able to hold price. So it's up to you in terms of how many confluences you want to add, right? Especially in terms of, entry wise, whatever the case may be. Because it's not always the case where you have an indication that will be so this big, right? Even with the correction, then that's where most people end up getting caught. You get what I'm saying? So that is how you can also mark your charts. So as you can see, we clearly had this also happening on the 4 hour, where we had price break structure to the downside over here, you know, price break structure to the downside. Obviously, price made a lower low over here, right? Lower low over here. And with that lower low, we had this lower high also over here, right? This lower high, we had this lower low, right? So I can just, let me just, yeah. We have this lower low that price created. We have this lower high that led to the indication, right? So we have an indication, right? So we clearly know that price needs to come back and correct to this area without breaking these lower highs. So same thing, like I said, right? Lower high. Same thing happened. Break of structure, lower low, lower high, right? The previous lower high was there. You get what I'm saying? So you have that happening, price went to downside. So you need to see price go back and correct. As you can see, price comes to this level over here to correct to these levels over here. This is the area that price can correct from. The low, then the lower high. Price can correct within this. So whatever's going to be happening inside is going to be part of the internals. What you want to be or where you want to be, you want to be below this area where price would give you a reaction off of. You get what I'm saying? So what price giving a reaction and below where you know that this level over here is a level of support for you, right? Is a level of support where you have buyers sitting. So as soon as price break to the downside, price will sell to the downside. But that's where I think also the buyers and sellers kind of thing gets maybe confuses people, right? So you don't need to be confused. You just want to be below where price has shown you before that you can sell, which is below this level, right? So as you can see, price does go to the upside, continues to correct, price starts to break to the downside, right? You could have easily probably sold price from this level, stop loss probably above these size over here, and then obviously looking to target this low, and it's gonna be a 1:2, you know, risk to reward. And as you can see, price does go to the downside, right? And there's also many ways in terms of what is this entry points or entry confluences, entries that you can use. Probably like, let's say, let me give you an example. On the 15-minute, we did have at the exact same area, right? Where we saw price start to break to downside, low, but price didn't really want to give us anything. You can clearly see that, okay, we have a level of resistance here on the, the level of support here on 15 minutes. So for me to not be greedy and maybe take this, I would want to be, taking a trade on a 15-minute, right? And how do I do that? I apply the very same thing. We can clearly see that price had been bouncing off this level. So once price breaks below and creates a low high, I can take price to the downside, meaning that as you can see, price made a low, made a lower high, went up to create a lower high. So this lower high over here would have easily also been more of an entry to the downside, right? I mean, this lower low would have been an entry. This lower high would be where my stop loss is, and everything also everything's all happening below the indication. Below this resistance that we did have, right? So price is going to the downside now. Price broke the support, turning it into a resistance, and also on the 15-minute, I can treat it the very same way, and I can also take probably to the downside. Even I can even get a 1:3, probably just to maybe increase my risk to reward, or I can even just aim for a 1:2, right? 2R, you see, same thing, right? If probably even if maybe you prefer it on the internal being the 1 hour, it would have been even, it would have shown even, you know, much easier. On the 1 hour basis, I probably would have said, okay, I see prices bouncing off of this level. I want to see price give me a lower low and a lower high, right? Price comes, creates a lower low, creates a lower high below this area over here. So you could have probably easily also used that to take price to the downside. Or you could have also even used this one on the 1 hour to say, oh, we do have an indication on the 1 hour, price will go back to correct to this level, and I can be looking to sell at this level over here, right? So when you look at that also, when you still go down to the next of 15 minutes, you'd realize that, okay, price is doing the same thing that it was doing from this level over there, right? You can see price made a high low, you know, relative equal highs, but then, you know, this high and low over here, you can also say, okay, I want to see price break below, go back and correct, and I can take price to the downside. Let's see what price does. Price does break below. As you can see, this could have easily been an entry for you also, right? You can also use that also to take price to the downside, right? There's many ways that you can, you know, lower high being there or just above the lower highs. 1:2 would be just about this level over here. And as you can see, there we had price hitting your TP, right? Or you could have just aimed for these lows over here, where you could have, you know, just took your entry from even these levels over here, where price would have broken below. Stop loss would have been just probably above this and would have got a 1:1, you know, risk to reward. There's many ways in terms of how you can go about it, right? So we do have also on the Has University, we do have, you know, about 4 entry, you know, methods that we use, you know. Um, yeah, pretty much. We have 4 entry, you know, so I can teach you some of them. You know, some of them already, 3 of them I've already put them there on YouTube, but the fourth one is actually something that we've been, you know, we've developed recently. Yeah, it's not something new actually, but it's something that, you know, I think for you to understand, you need somebody to break it down for you. You get what I'm saying? But the whole thing goes like where, like how you could have, you know, easily taken price to the downside, even with this above, you know, stop loss just above over here. And as price continues to break to the downside, you know, because in most cases you would get caught like this one over here, where you could have maybe said sold and then stop loss above, you could have got caught, right? So you know that this level over here now is a level where you want to avoid. So you want to see price giving you that, and then obviously looking to take price to the downside. As you can see, price indeed does go to your way, right? Price indeed does go your way. You get what I'm saying? So as you can see, this is the internals being the 1 hour. Everything else is happening on the 4 hour, as you can see, right? Everything else happens on the 4 hour, right? So that would mean the new lower high would be at this level over here. The new range would be at this level over here. So I'm just gonna delete the others, right? The new lower high, we did have a breakout structure here, of course. Sorry about that. We did have a breakout structure here. Price went up to correct, gave us a lower high. Now we have this lower low over here, right? Where price also broke, giving us a breakout structure. So now we can clearly see that price is giving us a new indication, right? Price give us a new indication. As you can see, price goes up, corrects to that level also. We have this, you see, same thing also. Corrects within this lower low, lower high, right? Price came to correct this here. So to the downside below this. Went up, is still correcting within this. Gains to the downside. You get what I'm saying? New indication below, price is correcting now within this proximity that we have over here, right? And this is also an indication to the downside. So here we are now in terms of where price is. As you can see, price is still under this lower high, and price can even sell, or price can be able to break above to the upside. But should price be able to break above to the upside, this would then be a market structure shift. That would mean price is now making a higher high. It needs to come and create a higher low so you can go to the upside, right? So we've been bearish, making lower lows and lower highs, right? Lower lows and lower highs. If you break this lower high, because it do have an indication downside, right? And price didn't continue to downside, and if it breaks to the upside, then that would be a new indication to the upside. That would mean now the price would have room to correct between this indication that we had on the upside and this low high price broke above, and then price will continue to go to the upside. You get what I'm saying? So I hope this helps you understand, also in terms of how you can use this thing, just, to avoid having too many things on your charts. Just keep it clean. The best way, like I said, the best way to keep it clean is using these, understanding price and break structure, and then all those kind of things, and the range also. you know like I said, range would always be a point between a low and a high that price created on the direction that it was going. On the downside, lower low, lower high, and then price broke to the downside to show that price is giving a continuation to the downside. Price gave an indication, broke the previous lower lows. Price needs to create a lower high, not a higher high. It needs to create a lower low, a lower high, so you can continue and go break the recent lower low that create a new lower low again, create a lower high again, break those lows again to the downside. You get what I'm saying? So that's pretty much how you want to see price do, and vice versa. If price was to go to the upside, price would also keep the same thing, right? And it's not always the case that price you would see price correcting back into the previous lows. So it will also be same thing, right? As you can see, price, that's the same thing all over. So we had this high and lows over here. Price has room to correct anywhere between this low, this high over here in this low, this high and low that we have over here, right? So same as price giving an indication again to go to the upside. You need this price to break above this side so you can know prices continue to go to the upside. And now also the new range becomes this high and this low where price came to correct. Even if price did come to correct up until this area, probably just about here, right? Price now with the new indication has room to correct between this previous indication high and this high and low created when this high was correcting the previous, in the previous highs or the previous range, right? So same thing also, price continues to go to the upside, and then you can look to do that also as price continues to do that. You get what I'm saying? So I hope this did help you guys, the ranges, you know. I hope this did help you understand the ranges and all those kind of things. Alright. Don't forget to like and subscribe, share the videos with others, and those who want to join the Hasu University also. If you want to join the Hasu University, just let me know. You can join the link on the subscription below, and then obviously there will be the link to this what is this to this free channel, the free Discord. This way there were some of the positions that I was holding. You see, and then also we have been holding some of the positions that we do have over there, right? So as you can see, yeah, we did have those positions, and yeah, this was just some of the entries that we're taking. I took this, yeah, pretty much, guys. All right. Thank you. Bye.